Welcome to the C-Suite podcast with me, Graham Barrett. I'm here in Frankfurt for Sibos, the global financial services event. We're producing these episodes in partnership with LSEG Risk Intelligence, who provide a range of solutions to help organizations effectively manage risk and reduce fraud. I'm going to be sitting down with a number of the key speakers and attendees here on LSEG's booth to gain a real snapshot of the key talking points here at the event. I really hope you enjoy these conversations. Okay, pleased to say that I've been joined by Mike Meadon, who's Director Asia Pacific at LSEG Risk Intelligence. Mike, how are you?
Good.
Yeah.
Thank you for having me, Graham.
Yeah.
I am.
Yeah.
It's been a great couple of days. We've had a lot of fun seeing our customers, partners, racing in an F1 car. Good fun.
Yeah. Now, thrilled to have you on the podcast because I'm really keen to hear more about your Sanctions Index, the LSEG Risk Intelligence Global Sanctions Index, to give it its full title. So you released that in March this year, didn't you? I was looking through it, looking through some of the headlines, and I noted it said that sanctions policy has never been as uncertain as it is today. That was kind of the standout remark for me. So how does that data look like 6 months down the line?
Still very much the same trends as we highlighted in that report, but maybe I'll just take a step back and talk a little bit about why we created the index in the first place. So when we first created the index, there was no way to talk about sanctions in a quantitative way. So everybody had an impression, hey, there's much more sanctions, and so we wanted to create something that's more quantitative, and you can actually have percentages. So using the analogy of price inflation, so cost of goods and services go up over time, we applied that to sanctions, and specifically all explicit sanctions globally. And, very interesting results. Over the last couple of years, we've seen several 100%, over 470% increase in the number of sanctioned persons globally. And because we track every sanctions regime in the world with WorldCheck, this is data we can collect and give not just our customers, but also policymakers the data that, look, this is happening. It's a very dramatic increase in sanctioned persons, much more risk for financial institutions and others. And, these increases have consequences, including to the cost of compliance.
Yeah, absolutely. So this sanction inflation, I guess we could call it, how is that impacting financial institutions then?
As I said, the primary impact is on the amount of work it creates for financial institutions. The regulators have become much more rigorous in their interpretation and in their enforcement of sanctions. And as a consequence of that, the risk has increased, of course. And the financial institutions are also having to interpret extremely complex regulations. Just this week, we saw the release of an interim rule by BIS extending the implicit sanctions regime of BIS, using the 50% rule concept from OFAC. And those changes require very detailed interpretation, ingestion into various systems, and understanding, training of frontline teams.
And just to be clear then, so the more names that are on that list, as it were, it becomes kind of many tentacled, I suppose. It just grows and grows and grows exponentially. Is that right?
Absolutely.
Yeah.
And the pressure that puts on compliance teams is immense because the risk of getting it wrong is very high. The consequences of getting it wrong are severe.
Yeah.
And so the pressure is really on, which is why, we at LSEG have been looking at this problem for some time. And as you know, this week at Sibos, we launched the WorldCheck on-demand solution to specifically address these issues. Not just around timeliness, which is one of the key focus areas, and the reason we've themed it around F1, the need for speed. Yeah. Regulators, especially the European regulators, have very enhanced expectations around how quickly people will turn around sanctions enforcement and how quickly they will block transactions involving sanctioned persons. So not only that, but also how do you address this challenge of name screening and the false positive creation from all of this sanctions inflation, and something like on-demand, because you're able to filter it in a much more fine, granular manner, really helps address this conundrum where we have the efficiency versus effectiveness issue in AML and sanction screening in general, where there's a bit of a trade-off. If you try to become more efficient, sometimes you become less effective. something like on-demand is meant to cut that Gordian knot and be able to be more efficient and more effective simultaneously, which isn't something that happens very often in our space, but I think this will actually do it.
Okay, and aside from sanctions, let's talk about, as I mentioned at the start, your Director Asia Pacific. So let's talk a little bit about the APAC region, maybe some of the trends that you're seeing in the payment space there. Maybe talk to me about stablecoins a little bit.
Yeah, so APAC has always been a hotbed of innovation, especially around payments. We have lots of diverse economies in APAC, several large financial centers, plus then several developing countries around, a strong need for remittance flow and cost-effective remittance. So we've seen the rise of various alternatives to traditional payment channels rise in APAC over the last couple of years, so that's been a big trend. But a major trend that we've seen, and we've a bunch of clients in APAC who do this, is stable coin-based transactions, so something like USDC, allowing for near instant settlement between payments between beneficiary and the originator, and doing that at a much more cost-effective level, not just at retail, but also B2B transactions.
Okay.
So the rise of that has been quite extraordinary. Some stats I was looking at was indicating a 70% year-on-year growth for stablecoin payments in APAC. Now, obviously, it's off a low base, so it's still a small percentage of the overall pie, but nonetheless, that seems to be a key innovation and something where APAC is probably leading a little bit the rest of the world.
Yeah. Why do you think that is? Why is Asia leading the way in stablecoin adoption?
Lots of innovation and a strong need, right? So as I was mentioning, the need for remittance flow, and we just have a lot of very clever people and lots of clever entrepreneurs in APAC, like strong pool of talent. So you have the rise of lots of very interesting businesses, including some very young businesses that have grown very fast. So you've got the combination of strong talent, strong entrepreneurial drive, seeing new opportunities, people creating new companies and creating new value and new ways of doing things.
Okay. And projecting forward, I guess you see some of these trends continuing. What do you see as some of the more disruptive trends that might shape the financial landscape in APAC?
That's a very big question.
Yeah. Let's try and narrow it down a bit, I mean, if you could maybe give one that you're particularly looking out for?
I'll mention a couple of things.
Okay,
so obviously there are geopolitical considerations in APAC, and those have strong implications both on trade and on the payments landscape. And you have the strong drive for innovation and a strong demand, as I was mentioning, for these kinds of payment flows that are affordable and effective and efficient, etc. So I think more of that, but then there's also harking back to the sanctions and how sanctions interlink with geopolitics. I think those potential disruptions will continue, and I think it's a key, I guess, message that I have is to be ready for any potential eventuality when it comes to geopolitical risk and potential fallout. We've seen multiple wars break out throughout the world, and including in my region and some of the neighboring countries around where I'm based in Singapore. Hopefully that doesn't recur, but it could. And if it does, it's important to have an ability to effectively manage those risks.
Sure. Yeah. Well, listen, we'll keep an eye out for the next sanctions index, because that'll be coming next year. It was a fascinating read, and thank you, Mike Meadon, for taking us through it today.
Thank you, Graham.
Yeah, I've now been joined by Florence Vicentini, who is the Chief Commercial Officer at Neterium. Florence, welcome to the podcast.
Yeah, thank you, Graham.
Yeah, it's great to see you here at Sibos. I'd love to start with, if you could give me an introduction to Neterium.
So Neterium is a company, so we are a technology company. So we specialize in screening, so which is a very niche part of the fight against financial crime. And what is pretty unique is that we provide a screening API as a software as a service in the public cloud. So we really focus on this piece, screening.
Okay. Brilliant. So you're the perfect person to speak to about financial crime and how we can detect and prevent it. So let's start on that subject. What emerging risks and challenges are you seeing at the moment, and how are you addressing them from a technology standpoint?
So I'm going to take the screening angle, but we know that financial crime has evolved a lot these past years, and it's like hacking. You have a new technology and then they do better, so it's exactly the same for financial crime. So the difficulties, I would say, is that it's to always follow what our customers need. What they have in mind, I think, is for them is to have a solution that I can adapt and adjust as quickly as possible, because with sanctions are used like a geopolitical weapon, I would say, and basically it can evolve extremely quickly. Like you have the Russian invasion of Ukraine, and within overnight there were new. I would say new regulations that came out, and the banks had to go with that. We can't really, and they can't also predict what geopolitical events are going to come, what the regulation will be. So for them, the thing that is key is really to have be able and have a solution who supports that, to adapt and adjust very quickly. And I think this is also why it was time, because screening exists in the 50s, and obviously September 11, unfortunately, increased the demand for sanction screening. But the thing is that the evolution since these times is so enormous that it's extremely important to have a future-proof solution. So really, I would say they're looking at how fast can you implement, or how fast can you make us compliant with these new regulations, or be compliant for that new world event.
Sure. Now, as financial crime becomes more sophisticated and, as you've just referenced there, increasingly global in nature, how important do you think collaboration is? So I'm thinking maybe through data sharing, partnerships, industry standards. How important is that collaboration?
So for me, it's extremely important, because we are part of an ecosystem. I think we all have the same goal, which is, make things safer. If I can take an example, we are a partner. We are partnering with LSEG, so we provide the technology, but we don't have the sanctions data to screen against. And basically, for us, it's being very close to LSEG. They launched yesterday the World Check, their new data set, World Check on Demand. And we were we were part of their early adopters program, and I think that it's really making sure that we can offer always the best, the newest, the latest solution within that ecosystem to our clients.
Absolutely, yeah. No, I was just speaking to Marc Meadon, who puts together their global sanctions index as well. So I've heard a lot about that from him. Now, what about cloud and AI? How are they changing the game here, particularly for payment screening, which is what we've just been talking about? Now, do you see these tools as primarily an opportunity to strengthen defenses, or are there risks and challenges that need, careful management as well?
So I think definitely. So maybe we'll take one after the other, because they're quite different. Definitely, they create an opportunity, but challenges at the same time. And I think that both need to be used carefully and smartly and wisely. Maybe if we start with AI, because this is the hype, the buzzword.
Yeah, absolutely.
So it's funny, because I had a friend who studied artificial intelligence a while ago. So I was curious enough to go on the internet and check when artificial intelligence was kind of created or whatever. Mm-hmm. And actually, it was formalized in 1956.
Yeah.
So it's been around for a while.
Yeah.
So you can see that what is about making noise about this is new, and how can it really help. I think the artificial intelligence definitely can be very useful in what we do. For example, we can use it pre-screening. For example, you have like trade payment messages, where you have a large text and you want to understand, what is the name, what is the country, and so on. So you can use artificial intelligence just to understand the context of a trade. You can enrich also the inputs of the screening engine, because the more you understand what you need to screen, the better the results. So basically we are using AI, but pre-screening, and there are also people using AI post-screening, but we don't use it for screening, because the explainability is really key. The regulators want to understand why there was a hit, why there was no hit also, and with AI you can't explain that. So I think another thing as well is when it comes to AI is that you need to have a very large data to train the model basically, and every payment is unique. It's also confidential data. You have data privacy law that you need to respect. So basically, for the screening engine itself, the screening piece, it would be a bit maybe dangerous, or you don't master everything. But definitely, AI in the screening process has its place. So I think it's just of using it wisely. For the cloud, I think in the past few years, I've seen a strong evolution where, financial institutions, they were, no, we want everything on-prem because this is more secure, and you could see that people were a bit afraid of the change, of the loss of control. And I think there has been some education around the cloud. Our solution is zero footprint, so this means that we store no data. So we receive the payment message and just send the results, and we don't store anything. And I think that the banks, financial institutions, they start to realize that actually the cloud is actually addressing a lot of their challenges. They have more and more pressure on the cost. Before compliance were like open budget, but this is no longer the case. They are requested to do more for the same budget. And basically the cloud is the speed, the latency, you have the implementation of upgrade projects are much shorter, so you can benefit from great features very rapidly, and they start to understand that the cloud, you have more security than you can have in your own premises. If you have to store the server, so I think it's let's use the cloud for something that is where you're not exposed and there is no data leak issues. So I think that's for both.
Yeah, and let's just finish up. You mentioned speed there, and there's often a tension, isn't there, between speed and effectiveness in payment. So how do you think we should balance that tension? How can technology help, in kind of real-time processing, but also meeting those kind of stringent regulations as well and compliance?
Yeah, so the payments, if you look, they need more and more speed. Mm-hmm. So if you look at instant payment, for example, this needs to be really done very quickly. Mm-hmm. It's domestic, but also international, so you have a bit more latency. Mm-hmm. And basically what happens is that in payment screening, something you can't compromise is effectiveness. No. So if there is a true hit, you need to detect it. I mean, it's no other option. Yeah. So the issue is that is to get that level of effectiveness, which should be 100%. Mm-hmm. What is the impact, I would say, on the efficiency, which is the number of false positives? Sure. Because if you have a false positive, it completely kills the speed. Mm-hmm. Because you stop the message. Sometimes they have to be processed in milliseconds. Mm-hmm. The SLA on messages tends to be shorter and shorter. And if you catch all the true hits, but you stop half or 15% of your messages because there could be doubts. Yep. So I think that it's really, really essential to be able to keep that speed without compromising the effectiveness, to make sure that the number of false positives is as low as possible, without increasing the risk for the banks, obviously.
Absolutely. Well, listen, thank you so much for taking us through that. Florence Vicentini, thank you for joining me on the podcast.
Thank you for your time, Graham.
Yeah, pleased to say I've been joined by Stephen Richardson now, who is Chief Strategy Officer and Head of Banking at Fireblocks. Stephen, how are you today?
I'm good, how are you?
Yeah, really well. Thank you for joining us on the podcast. Now, you spoke on a session, didn't you, here at Sibos called Banking on Stablecoins, Why Financial Institutions Are Moving from Pilots to Production. So tell me a little bit more about that session and how that shift is emerging.
Yeah, so I mean, it was really a session around how traditional financial institutions are starting to adopt a new technology in stablecoins. And we were joined by Vid from RBI, who's a part of the 9-member bank consortium launching a European stablecoin. Obviously, as you think about stablecoins holistically, that's been a tool used by crypto native players over the last few years to enable things like trading within the crypto native space. We started to see it as being adopted by payments companies for things like cross-border transactions on like the SMB side, for remittance type payments, etc. And now you're starting to see the technology be adopted by financial institutions, traditional financial institutions. I think over a long period of time, you'd seen things around CBDCs, tokenized deposits. But now with like the regulation around stablecoins in the US with the Genius Act, obviously what's happening in Europe with MiCA, in places like Singapore and Hong Kong with the regulation that's coming there, and in places like Australia, I think you're starting to see banks look at how they can utilize this tool for developing commercial use cases for their corporate clients and for their retail clients. And so I think it's really a basis of how do you utilize this technology in a real way, and how do you take something that's been maybe conceptual for a lot of financial institutions and make it very much a practical application.
So things are clearly progressing.
Yeah.
Which financial institutions in particular are leading the way in stablecoin adoption, and what does that mean for the landscape as a whole?
Yeah, look, I mean, if you think currently right now, it's around PSPs and payments companies, right? I think broadly speaking, I think there was a study by McKinsey that talked about how SMBs are shifting away from traditional financial institutions towards non-traditional ones, like the payments type companies and crossovers and fintechs. And I think they've been able to understand the utilization of this technology in a real way and bridge the needs of corporate clients and their retail clients with the evolution of technology. And so I think they're setting a path forward in terms of what a good user experience around stablecoins can look like. And I think banks are starting to understand that there is a real commercial viable option here, and there's real disruption potential here with stablecoins. And so I think they'll be fast to follow in a lot of ways in terms of things like stablecoin acceptance, working with different fintech partners, the likes of Circle and others, to utilize stablecoins, but it's something that they're going to have to do.
And let's talk about how Fireblocks comes into the mix here, because you've just launched Network for Payments earlier this month, actually.
Yep.
So what was the thinking behind that? What are the implications of bringing that in?
Look, so at Fireblocks, we process close to, our clients process close to $200 billion worth of stables and payments a month, right? I mean, it's pretty significant volume across the board for a real use case, right? And what you start to see is that each of our clients were starting to develop networks by which they could settle stablecoins with each other, but there wasn't really like a common infrastructure for them to leverage for that orchestration, right? And so what we tried to do here was like create a basis in which all of the different companies, whether they're exchanges or PSPs or others, could leverage and tap into a singular infrastructure and network, but which to then utilize stablecoins for payments and for payments type use cases. And so I think when we focus on like the payments network for across the board, really it starts at the PSP level with the different companies that we've onboarded. And I think we'll see an extension into banks and into other type of financial institutions that want to leverage stablecoins and make direct payments, all the right messaging standards, the ability to follow things like travel rule, the right like compliance standards, and then the right like network attestation basis to really ensure that the stablecoins move properly from one place to another and can be orchestrated in a seamless way. And so I think that's where we wanted to provide value, right, and really that payments orchestration. And I think it's been quite a successful launch for us.
Yeah. And how do you ensure strong fraud and AML controls across that network, but obviously while still maintaining the smooth, frictionless experience for your customers?
Look, I think there's always been this concern around the utilization of crypto as a whole for fraudulent activity. And I always like to say that I think in some ways, like, it's a bit overstated, right? I mean, there's fraud across the entire ecosystem, whether you're using dollars or euros or anything like that. In places like Singapore, we're doing much more on the traditional banking side to prevent fraud in the traditional routes, right? Let alone in digital ones. I do think it's one of those things that should be acknowledged that, the technology around digital assets allows for like very significant traceability, right? You have tools like Chainalysis and Elliptic that come into play to enable, making sure that you're interacting with the right counterparties. You have things like the travel rule that make you attest who you're interacting with and send the right messaging across from a wallet from VAS to VAS. You have regulated entities and regulated VASs that have been licensed within different jurisdictions to be able to operate with digital currencies. And then you have really the ability to like orchestrate like the right flows, right? And the right governance on top of those flows. So when you add all of those layers together, you really start to put together a preventative model for a lot of the more malicious behavior that we're seeing in the space. And I think that's something that, our clients are doing and something that we've really packaged together in a seamless way for our clients to be able to use.
Yeah, and just finish up by just telling me if you think there are any emerging risks or trends that we should particularly be looking out for. Is there anything you're seeing on your radar?
Obviously, as you start to get towards like more orchestration, think about things like AI agents that will start to be utilized in the payment space. It's one of those things where really like the coding and the encapsulation of those workflows is something to be very cautious of, right? And obviously there's real scale in utilizing those things, but there's then obviously opportunities that there are mistakes and errors that occur across the board. That happens on a human level as well.
Sure.
But as we're starting to like really leverage this new technology, I think it's something that we're increasingly aware of and understanding like the potential risks of that, especially as you think about the kind of flows that really could occur with money being on chain. And so I think that's a very interesting area to watch moving forward.
Let's see how the infrastructure develops. Obviously, you've got that framework in place now, so I'll be really keen to see how the adoption moves forward over the next few years. But for now, Stephen Richardson, thank you for joining me on the podcast.
Thank you for having me.
Pleased to say that I've been joined here at Sibos by Pablo Villegas Garcia, who is EMEA Payments Head at AWS. Pablo, how are you?
Very good. Very happy to be here in another Sibos edition, and lots going on, as you can see here on the floor.
Yeah, absolutely. Now, we only spoke a few months ago, didn't we, at Money 2020, so it's great to get you back on the podcast. Look, things are changing at such a rapid rate, aren't they, in the current environment? So even those few months, things are changing. What are some of your insights in terms of the payments landscape? How do you see it evolving over the next few years?
So there's a few things moving on and recurring within the payments landscape, based on what customers I'm working with, right? It's difficult to obviously predict what's going to happen, but what we can see is probably three areas, right? Financial crime and real-time data continues to be top of mind of customers because real-time payment rails continue to grow. I think the last data I saw was about 60 plus real-time schemes, which obviously bring challenges from a financial crime perspective. We have seen the implication of that in the UK, almost £500 million lost to authorized push payment in 2024. That's a recurring situation with customers. We've seen, and again, I'm coming from talking to another customer right now, false positives, right? How to reduce false positives because they have an impact across the value chain and therefore operational, right? So financial crime, and as a result of real-time payments, continue to be top of mind, right? What's the other element that is coming in that innovation is customer experience. Customers continue to be looking into how they differentiate themselves in that space. I'm going to give you this an example because I'm working with some customers where I'm bringing kind of the power of AWS plus innovation, right? Think you are a merchant and how can you add value to your customer, right? Which is not the customer that is just making a point of sale transaction, but actually the end customer. Think about, I don't know, a Manchester United fan going to a stadium on a Sunday, on a Saturday to see how Man United wins, basically.
Well, not so much at the moment, but yeah.
Yeah, I know, that's why. But think about that. Manchester United knows you. You are a fan. You're going to go on Sunday to watch the match. What are you going to need? You probably are driving, maybe, right? You're going to need a parking. You're going to need to put petrol. Okay. Where are you going to put petrol? You might go to the fan shop and buy a t-shirt, right? that's where the value is, right? Understanding that value chain and how you can make that customer journey different, because you as Manchester United have the data and you know what your customer is going to do, right? There's a few discussions on having that data, which is super interesting. Last but not least is obviously digital currencies. Therefore, especially basically stable coins, as we can see, right? More and more discussions are coming into that, and obviously what stable coins bring, and it's part of the crypto, is obviously financial crime, how you make sure that whoever is transacting with the stable coins have gone through the right approvals and basically checks. Companies like Elliptic are doing that in the space, right? And it's very specific, but many discussions in that space.
And what are the most exciting innovations you're seeing within AI? It would be remiss of us not to speak about AI at this conference. So what are some of the innovations that you're seeing in cloud infrastructure, AI, and how are they changing the payments landscape?
So there's a few elements there, right? I would say, I'm going to name them and then just double dip a little bit on them, right? You need to think about the value chain of the payments, from payment capture to basically processing and execution. Right? That's one element, right? Another one is enhancing the automation and therefore helping the humans dealing with that value chain, right? As a result of that, you get into agentic and what agents can do, right? But if I go back to the top, right, thinking at that value chain, from where you capture the payment, you validate the payment, you settle, you reconcile, you do the payout, right? There are many places where we can fix in that space, right? You think in rule-based systems. There's still many rule-based systems to identify fraud. We can help. There's ways to enhance that and avoid the manual kind of overhead of identifying a rule with your machine learning and then building a rule. False positives, as I was mentioning. How do you help a human to basically avoid reading and validating, okay, this is a possible false positive. Which additional data do I need to bring? How do you help there, right? Transaction categorization is coming as another one, right? You want to understand what type of transaction you're coming so that the end customer knows what's spending the money on, right? Again, machine learning and AI helping on that, right? That's where the interaction of Gen AI, it's really helping your back office teams to help. And we have seen this, like the customer I was in with this morning, I've actually applied some Gen AI to do that, right? And as a result of that, customers are starting now, because I'm having conversations on agentic. It's a game changer, but it's starting from the very basics, right? Given an example to make this real for listeners, payments orchestration, right? Customers out there with 50, 60, 100 kind of gateways, PSPs linked to provide kind of that. Bringing an agentic solution, and I'm building a POC with a customer at the minute, and we are exploring that wider. It's game changer. Why? Because you have an agent that really knows what contracts you have with those PSPs, the cost per transaction, volumes, currencies, regulation. You can have another agent doing, okay, I'm going to be doing a transaction between the US and Nigeria. Okay, what regulation are you subject to, right? So whenever you think about having individual agents and then having a single multi-agent orchestrating that, you really can say what's the value of that payments route, and that helps the customer because you become more efficient. It becomes less costly in terms of where you go. So that's an area where helping with agentic in really specific cases is we can see innovation coming from our customers, and I have customers doing that.
Yeah. Now you've mentioned there the increasing nature of fraud, the increasing sophistication. So how can these tools help to detect and ultimately prevent financial crime in AML?
There's a few bits there, right? And this is quite important, and we see this now as a force of change, basically, right? Companies use tools basically to identify financial crime, whether it's sanctions screening, whether it's anti-money laundering, whether it's transactional fraud. The value comes from now they are using that tool to identify such a scenario, how you add your own metadata into that and then put Gen AI, machine learning algorithms to really enhance whatever you get. We are seeing kind of really impactful kind of scenarios on some customers where they are leveraging whatever comes and reaching with your own data, which is yours. You don't know. The third party doesn't have your data, right? That's one element. The other one, which similar to what London Stock Exchange Risk Intelligence Group is doing, is unification, right? Because there's more complexity out there in the market. How do you bring a little bit some of that unified solution that is helping you in the onboarding, that is helping you in the transactional, that is helping you in sanctions, right? Because the customer doesn't want to deal with, 20, 30 different tools for different markets. So having unified solutions across different markets really kind of makes a difference in the space. And last but not least, technology, right? We see this day in and day out, right? We have moved from rule-based systems in the financial crime space to neural graph networks, which is much more powerful than what we saw a few years ago. And now we're going to large language model. So I haven't seen, but I think this is what is going to happen eventually.
Yep.
How do you merge the two worlds of LLMs and graph neural networks? Because then that allows to actually identify fully where a fraud ring may be operating, which is really difficult these days, right? And that's where kind of your data capabilities, computing capabilities come into place to identify those scenarios.
Yeah, because I guess that's the problem at the moment, isn't it? It's the anonymity of those fraudsters. They're just operating from somewhere in the world. We don't know where. So 100%. Well, listen, thank you for helping us navigate those complexities as usual. Yeah. Pablo, Villegas, Garcia, thank you for joining me on the podcast.
No worries. Been a pleasure again being today with the London Stock Exchange Group and yourselves.
Well, pleased to say I've now been joined by Deepak Arora. He is Head of Banking, Continental Europe at HCL Tech. Deepak, thanks for joining me here today.
Thanks for having me. It's a pleasure being here.
Yeah, no, it's great to have you on the podcast. Now, let's talk about AI. That's a dominant conversation, isn't it, here at Sibos? How do you see AI redefining the future of banking? Let's start there.
The reality is that it's become a buzzword. Yeah, it's almost become a hype. But come to think of it, autonomous systems have been existing in other industries for years now. Yeah, you look at the automobile industry. Tesla was the first one to come up with a computer on wheels, everything happening over the air. They just eliminated manual systems.
Yep.
And you start thinking about it, what they simply did was they made autonomy not just a feature, but they made autonomy a foundation. The financial services organizations are just realizing that we've moved past the era of automation and we've gone into the age of autonomy. For the banks, it is now about thinking, how do I really adopt autonomous systems? Yep. We've been having digital systems, mobile systems, all these applications for years, but the trouble is you still expect the user to log in, click on the various systems, click on buttons, navigate through pages, and you think it's digital. But is that really it? You're still expecting everything for the user to do it. Autonomous systems is where the onus of action moves from the user to the system. The system understands you. It really has more context about you, decides on your behalf, executes on your behalf, and it's constantly learning. Think about it, I'm doing cross-border payments from account A to account B.
Yep.
The system does facial recognition, does KYC, just then applies business rules, applies the compliance and regulatory rules on it, and does the payments on your behalf. That's true autonomy.
Yeah.
In fact, that's almost delegation. That's the stage we all want to reach, where there is real-time payments, real-time autonomous systems to happen. But that to happen, you will need the three firepowers to come together. You want automation, which will drive consistency and speed. You want AI workflows who can learn and adapt, and you want agents to be able to decide for you. You also want an architecture which is composable, API-driven, modular, and more importantly, you can get an architecture where there is trust, transparency, and traceability. But the one thing which I've really seen, and I want organizations to adopt, is we need to stop re-engineering. So whenever we start doing something, we look at the old process and say, hey, let's try to fix this.
Yeah.
But the magic sword or the magic pill to really adopt AI is going to be reimagine and not re-engineer.
Okay, yeah, I like it. You do a nice line in catchphrases,
Yeah.
so that's very good, yeah. So what are the challenges then that banks face in in bringing this all together, introducing this AI-driven technology?
We started up saying that there's way too much hype. How do you take this hype from reality? I go and meet with a lot of customers, and a lot of these customers, there's some crazy excitement, unrealistic expectations. And the role for us is, how do we take these customers to move from this crazy excitement or crazy exaggerated expectations to start delivering value using these AI and Gen AI programs. This is what we call AI readiness. AI readiness basically means, are you structurally, strategically, technically and culturally ready to adopt AI, to scale up AI, so that you can start delivering value. Without this AI readiness, you will see organizations doing pilots in silos, pilots failing, pilots not being able to scale up, a lot of mistrust in data and lack of business alignment. This is where we play a role, where we say, okay, we will drive in AI readiness, and the 5 pillars to really overcome the challenges are: step 1, do you have organization buy-in? So does the CEO, the CFO really believe in AI, or do they think it's a novelty? Do they think they just want to do it because everyone else is doing it, or do they understand that they can use the power of AI to create a differentiation? Do they have a mandate? And this is what we can help. Second is a cultural, a change management and a workflow evolution. Organizations need to realize that if you go down this path, in 2 years, 3 years, maybe in 5 years, 50% of the roles in the organization will dramatically change.
It's crazy.
Which means you need to have an upfront conversation with your workforce saying, I'm going to upskill you. I'm going to find a new role for you because maybe your role may not exist. Are you willing to have those conversations?
You need to project forward, don't you? And think about where we're going to be and how to prepare people.
You need to embrace the risks, because if you don't talk about it, the same workforce will hinder the speed at which you can deliver these AI programs.
There's got to be that buy-in.
And the next one is, do you really have the infrastructure? And are you really thinking about the risk and regulatory compliance? One of the big hurdles is that you want a digital backbone to deliver these AI projects. You want the guardrails so that there is trust, transparency and traceability, because the regulators are going to come and ask, hey, I heard you're doing AI projects. Can I really see, is there hallucination in the systems? On what basis are these decisions made? And finally, how do you keep convincing your business that there's just money not being thrown away and there's value being delivered every single project?
Okay. Now, just finish up by telling me, you mentioned there you go out and speak to a lot of customers. Could you give us maybe a real-life example of how AI has really helped?
So I'll actually talk about one of a large customer we have. And last year, this is the head of investment banking. The business head and the CIO, we were having our quarterly meetings because we are one of the large partners. And they said, we've heard a lot about AI. We're fed up of it. We want to make this happen. We want to make it real. How do we experience it? And my simple question was, forget AI, just tell me, what is one thing which is really keeping you awake in the night? What's really struggling you? Don't think about how can I get AI into my system, but talk about what can I do to improve my life.
Look for a problem that you want to solve.
Real problem. We've got thousands of compliance analysts who go through each and every alert to see, is there any malfunction? Is there any fraud happening through it? Can AI help me? All what we did was that we mapped their entire process and we looked at the process and said, okay, where can I bring in automation? What can I eliminate? Where can I bring in machine learning? What can I do to really bring in generative AI? And we redesigned the whole process to make it more tangible and beneficial. So in a way, fix the problem, fix the process. We've now gone live where we have deployed a Gen AI solution in the compliance division. What it is helping the bank to do is that they've been able to cut down on the amount of effort their compliance analysts were spending in going through all the alerts. Now they are only looking at the most severe alerts, because the generative AI solution tells them this is the priority, this is the severity, all the data on on your one page. They look at the history, they look at all the trends and say, okay, this actually looks like a fraud, or this is just an alert because there was a market reaction. You can let go of it. There's still a human in the loop, but the generative AI engines are really giving them tools to act more smarter, more efficiently and faster.
Yeah, so they just got that one-page summary rather than sifting through piles and piles of papers. Yeah,
absolutely.
That completely makes sense. No, that really brings it to life. So thank you for sharing that example.
Pleasure.
And Deepak, Arora, thank you for joining me on the podcast.
And thank you for inviting me. Lovely conversation.
Yeah, pleased to say I've been joined by Marc Andrews, who's Global Managing Director at Pegasystems. Marc, how's it going?
It's going well. Thanks for having me today.
No, thank you for joining us on the podcast. Let's start with Pegasystems. Could you give us a brief overview of the business?
Yeah, so Pega has actually been around for several decades now, and we work with large institutions to help them automate and streamline their business processes so they can deliver better customer experience, improve operational efficiency, and of course, lately we're applying AI and agents to take that to the next level.
Yeah, absolutely. Well, we'll probably touch on AI throughout this conversation, I'm sure. How are you seeing the payments ecosystem evolving at the moment? And maybe if you could project into the future a little bit, how you think it might change over the coming years?
Well, it's interesting, and one of the things we're hearing from a lot of people here is a bit of confusion, frankly, because there's this proliferation of all these different payment types, payment rails that people are having to deal with. And Swift has been doing some very innovative things to try and drive standardization and make it easier for people to deal with that. But unfortunately, that's just one payment rail that they're dealing with. In fact, bank that I just met with said, hey, we can't just be thinking about our global payments, but how do we also handle the other payment types that we're dealing with?
Right.
And it's driving, I think everyone was hoping that the volume of exceptions would go down, they'd be able to drive more straight through processing, but what I'm hearing consistently is, there's new types of exceptions arising, and the percentage of things that basically go wrong has not gone down recently.
So what in essence is supposed to be becoming more straightforward is becoming more complicated?
Well, the problem is no one bank controls all the information. Everyone says, hey, if I can streamline improve the information that goes in, then I'll have less problems downstream. But one bank only sees their side of the payment. And sometimes they're in the middle and have multiple banks at different ends of the payment.
Yeah. So the obvious follow-up question, what's the answer to that? How can that become more of a collaborative approach? Is that possible?
The answer that we're seeing is, interestingly, how can we start applying things like AI and agentic capabilities to really streamline and enable straight-through resolution? We're not going to keep exceptions from happening. I think there's a recognition of that. But how can we reduce the time and effort it takes and the manual activities typically required? And that's where we've been really focused, is how can we take things to the next level? And this space is evolving so rapidly. Interestingly, last year at Sibos, we would have been talking about how we can drive more automation of moving tasks from one step to another, how we can automate things, and this new generative AI space was only emerging. And we might have talked about how we could use it to summarize what's happened.
Right.
But now we are seeing the potential to have agents that actually analyze the payment data, do comparisons, determine what the specific issue is, still with the human in the loop to review and approve it, but reduce the amount of work that has to be done.
Yeah, that's a huge difference in only 1 year. It really is.
Absolutely.
Isn't it? Yeah. Are there any other use cases for AI that you see within the payments landscape?
Well, yes, and it's interesting. We've found that there are some emerging problems with how people use AI. I don't know if you saw some of the issues that just popped up over the past day of people injecting malware into prompts, and good timing. And I don't know if people can see my no prompts.
Yes, we can. Yeah, look at that. No prompts.
No prompts pin. And part of the reason for that is we think many organizations and many of our kind of peers and competitors are taking a approach that's very risky. They're trying to have people create prompts that ask a agent to figure out how a process should be done. And we have found that's very risky, because I'm sure if you've ever entered something into ChatGPT or Copilot, you type in the exact same thing 2 times and you get different answers. And in a regulated environment like this, you can't afford to have an agent drive different processes or activities. So we're using AI to actually help define what those processes should look like and should be, and codifying those so that then you're actually embedding the rules, and then maybe have an agent work on specific data in there and do some analysis, but in a more controlled manner. Yeah. So we're able to deliver more predictable AI capabilities.
Absolutely. It almost becomes somewhat of a philosophical question, doesn't it? Like, how many answers are there to the same question?
Absolutely.
Okay. Let's move on to fraud. So obviously that is becoming increasingly sophisticated, particularly with these tools such as AI and cloud infrastructure, all of the rest. How are we going to fight back? How do you see the tools being able to prevent some of the attacks that we're seeing?
To be frank, we think prevention is going to be a very hard battle to fight. Right. Anytime there's a new technology emerging, a new payment rail emerging, it provides a new avenue for fraudsters to find a way in. And where we think the opportunity needs to rely is how can people react and respond and address that in a more rapid fashion. Okay. And that's really where the opportunity is. And even when you look at the world of AML and fraud and sanctions, typically what fraudsters are trying to do is obfuscate their activities and break them into small different things that happen in different areas. And traditionally what people have been doing is taking those individual alerts or activities and reviewing them by themselves. And we see an opportunity to do it more holistically, consolidate and have agentic capabilities to look across alerts, consolidate it, see what are all the related parties, what are the involved in multiple different transactions. Because usually what happens is you see the same party is involved in multiple different transactions. Right. No single person looking at any individual alert will be able to see that, but you can have, if you can provide a system that can look across those alerts coming from different systems, you find where those higher level patterns are and can detect them more quickly.
So if you're a business and you start using these AI tools in those use cases for fraud prevention, are there inherent risks and challenges that come with doing that as well?
Absolutely, and one of the big things is, are the regulators going to trust what's happened? And I think this is going to be a progression that people have to take. You're going to have to use it in gradual approaches, and it gets back to sort of what I said before. It's not about prompts. It's not about having an agent go up and try and figure out what the process is. It's codifying and knowing what is the process that you need to follow and having agents perform certain activities in particular. And today it's going to be having a human in the loop. And it's interesting, it used to be as we brought in new people, new analysts, you would have a, what people call the 4-eye review process. You'd have a QA process where someone goes and reviews work. And the process was you'd have a person that just came into the organization or came into that role for the first 6 months. You have all their work reviewed, and then as they become more effective and you trust them more, you have less and less work reviewed. And we think it's going to be the same with the agentic capabilities. Initially, you'll use agents to do some of this work, and you'll have a human reviewing everything, and over time you'll build up trust in that agent where they're reviewing less and less. And I don't know if this is even more scary, but eventually there'll be another agent that's doing the review of the first agent. You won't even have a human doing the agent.
But that's, it makes complete sense though, isn't it? And I guess the danger is just jumping, not going through those steps and jump into thinking that the AI can do everything without that balance and checks in place.
Absolutely.
But well, listen, you referenced how much has changed in a year. Maybe we'll speak to you next year and find out how things have progressed even further.
That would be exciting. I think there's a lot more yet to come in this space.
Well, Marc Andrews, thank you so much for joining me on the podcast here today.
Thank you.
Really hope you've enjoyed these conversations from LSEG Risk Intelligence's booth here at Sibos in Frankfurt. And if you have enjoyed the show, please do give us a positive rating or review on your podcast app of choice. And if you'd like to get in touch with the show, you can do that via the contact form at csuitepodcast.com. You can find me, Graham Barrett, on LinkedIn. But for now, thank you for listening and goodbye.